Hey, welcome everybody to 40 Finance channel. I'm doing a little live analysis here today. And the reason I hopped on is, and I mentioned this last week, it's a really weird environment right now. And we'll kind of take a look at some of the prices going forward. But you saw, if you looked at the title slide for this video, that the concept is interest rates are falling again. I think yesterday they reached the same level that we saw in February. We'll take a look in more detail here in a second. And they continue to go down a little bit today. And we're also seeing a little bit of weakness in the market, if you will, in certain situations and sectors and whatnot. So the question I think that should be on our minds in terms of buying opportunities is, what does this mean? This is, these things are not moving in unison, and I guess that's where, I'm not a great economist by any stretch of the imagination, but that's where I get a little bit nervous when you just can't really dial in which direction things are going. So that's what we're going to talk about today. Also going to do the normal livestock analysis. If you guys have requests, go ahead and test the chat for me and just put a hello in there so that I know that's working. But we're just going to dig around a little bit. It's an interesting day, and I personally have been holding off to the sidelines over the past couple weeks. I bought a few things in the May dip, which was May 14, 15, something like that. And then I've held off since. I just did a portfolio update. If you haven't seen that, that's a pinned video on the home page of the channel if you're curious which stocks I hold and how they've been doing. So that's what we're up to today, and I appreciate everybody coming out. Going to transition over to the Yahoo Screen so we can get a feel for where the markets are at today. And this is what I'm talking about right up top here. So you got basically flat on the S&P and the Dow. NASDAQ has been going up and down. It's just down 0.36% right now. The Russell 2000, let me see if I can get this. There we go. There's my little icon mouse. The Russell 2000's certainly been struggling over the past couple days. Let's see, a 5-day on that one. You had a peak at 2,300, and you can see that it's gone down. Yesterday reached a low of 2236. So small cap stocks right now are on a little bit of a tailspin, I guess you would say. But looking back up, here's to me is what is interesting. So the 10-year bond, 1.308. Let's go on a year-to-date look. Here's where we are on July 7th. That dates back to roughly Valentine's Day, February 17th. And oddly enough, back then, when these interest rates started to go up, right around Valentine's Day, we also had stocks take a pretty big turn down. So theoretically, if you go by that behavior, the interest rates coming down, we should be seeing new highs in stocks, which we have seen a little bit in some sectors, but it's not as big as I would have imagined. And I guess if you felt like you missed out on the, call it the refinance boom, for all you Rocket shareholders, that could be coming back if this keeps going up. We hit over 1%, looks like around January 6th. Now we're up to now we're at 1.3, but the high was close to 1.75. So interesting world indeed on the interest rate front. And crude oil, I think that peaked at 75 bucks yesterday, or excuse me, July 2nd, and now that one's down to $72. So very interesting world that we're in. I think oil does keep going up. Most of the speculation that I've read suggests that $100 a barrel is not out of the question. So if you are into oil stocks, unfortunately, I am not. I've thought about it many, many times. You could be in for a continued good run. All right, so over in my portfolio, let's see what's up and down today. I think the biggest mover, which is not in here. Oh, here we go. Palantir down 6%. For me, is the biggest loser. DraftKings also under 50. Some of that probably has to do with the Russell. If those are indeed in the Russell 2000, I'm not 100% sure. But those kinds of stocks are getting killed today. On the plus side, for me, not a lot to speak of. Little dinks and dunks here with PayPal. Looks like Rocket is probably enjoying the news about interest rates. So, good for them. They're going to need more help from interest rates, I think, before stuff really, really takes off. All right, clicking over here to Market Watch. Take a look at some of the headlines. I'm going to fix the screen a little bit because their big headline is still COVID related. CDC says Delta variant responsible for majority of U.S. COVID cases. Are we still nervous about this? I'm not personally in the vaccine world, but you could have that event where maybe something does happen with Corona that we will see another dip in the stock market. It just doesn't feel like it in America. And then, of course, the big problem that we're all seeing, U.S. job openings are there, but not enough workers to fill them. If you are in service type industry, consumer service stocks like I am, this is a big long-term concern. So, some examples would be Disney on the park side, having enough workers to actually keep that situation going. Then you would also have to think about anything that's restaurants and travel, all those items, those places are struggling. Then you start to get into Amazons and FedEx and even e-commerce world, like how can they get the packages and the inventory to you? Those are chief concerns that I'm watching very closely, because at the end of the day, if you're not running your business at capacity, you're leaving profits on the table. And I think like the safer plays in my book, out of stocks that I already own, would be Visa and PayPal because they're transaction based. But the profits and margin, let's just say on the Home Depot side, just to pick a name out of a hat, there could be some risk to the level that they grow if they cannot keep the staff in place at stores to sell some of the ancillary products, right? People who come in and just pick up a box of nails and do self-checkout, they're probably fine. But how are things going in, say, the carpet department or the paint department, places where you actually need a human being to help you out? That's going to be, that could be a tough time for places like Home Depot, who right now should literally be printing money because of all the influx in dollars. So if you get a chance to type in a chat question, please do. I haven't seen anything. I'll try to post one. I just want to make sure this is working. All right. So I was able to post on my little platform. Let me just double check on YouTube, because I know that I've had problems with this in the past. All right. Looks good. All right. So what else is going on? I read an interesting article the other day on Market Watch about stocks that were all-time lows in June. Let me pull that up for you. And the concept with that is If you look at stocks that have struggled, potentially for, let's just call it 30 days or so, I'm going to adjust this a little bit. So here's the headline. These 15 stocks, June's biggest losers, could become July's winners. And I'm just going to skip through the text. But the concept is, do you go buy low, sell high on stuff like this? And one of my stocks made the list, which is Sabre. Sabre is tied to the travel industry. They do a lot. Sorry, there's Sabre. Didn't show up on the screen. And with Sabre, you know, it's really waiting for the travel industry to get back going. And I would imagine, looking at this list, that Alaska Air's in the same boat. We got Alliance Data Systems, America Car Mart. That one should be doing better, in my opinion, simply because of the way that used cars are going. Goodyear, LCI, Mosaic, Medfast, Organon, Patrick Industries, and Regions Financial. So since we don't have any questions yet, I'm just going to pick off Alaska Air Group off this list, and let's just see if there might be an opportunity. Obviously, a lot of people have been jumping into the airlines over the past 90 days, looking for a good return. I'm going to fix the screen so that it shows you things a little bit better. Scroll out here. Let's take a look at their year-to-date. So they kicked off January at 49. Remember, at 49, there were still travel restrictions and all those things. You reached a peak of 73. Now you're down to 57.66. You've got trailing 12 months EPS of minus $9. There's Jordan. Jordan, I appreciate you typing in. I was not sure that the chat was working, so welcome. All right, so let's look at what Alaskan Airlines has going on in terms of projections. All right, so we've got 15 analysts covering this one, which is a pretty good number, so we can feel good kind of crowdsourcing projections when you're getting into double digits on the analysts. Year ago EPS, we talked about, you know, dumpster fire, obviously, with the airline industry. This year, they bring that up to minus $3 on earnings. And then next year, they get back to positive. Somewhere, the consensus view is about $4.91. Let me squeeze that in a little bit. So right off the bat, we've got easy math, right? 57 divided by 5. You know, somewhere under 12 is your forward PE. And then on the revenue side, expecting to grow 75% this year. Again, grow is a weird word because I would argue getting back to par. But 3.39 billion to 597 to 8.16. So this is exactly the flow that you want to see for a stock. Granted, this is more like a growth flow, but we know that the growth will come, I would imagine, to an end at some point. But looks like you got a whole nother year in here. And then finally on the EPS trend, 90 days ago, this is a bullish sign here, 90 days ago, the consensus for next year was 416. That consensus has went up to 491. So this is another good sign. Now, what we're probably dealing with in an airline, let's take a look at their numbers, is this right here. So this forward PE number, we're on annual, by the way. This forward PE number is inaccurate. In the sense that we should be looking ahead to next year. We saw next year the projection is about $5 EPS. So this forward PE is more like a 12, in my opinion. It just hasn't been updated yet. And even at a 12, from an annual standpoint, you have been able to purchase Alaska Air for forward PEs in the 10s, dating back to, take 2020 out of the belt, and you're looking at almost every year it was in the 10s, right? No PEG ratio for this one. Price to sales at 276. That one's hard to read too because it's a trailing 12 months metric. We know their sales are going to get a lot better. However, we also see that historically you've been able to get well under 2. They're probably there right now, but it's hard to run a price to sales number sporadically off my head, so I'm not even going to try. Let's look at income statement. Let's see how bad the damage was. In particular, the balance sheet. So $3.5 billion in cash, debt of $5 billion. Not too bad, to be honest with you. It could have been a lot worse with no planes flying. And trailing 12 months revenue of $273 billion. We know that. So let's go down here one more time. We know that they have about $5 billion in debt, right? And we saw on the projections that this year they'll have, pretty close to $6 billion, and next year up to $8 billion. So I wouldn't call it ideal level of debt, but I would say that just eyeballing these numbers, I'm not super duper concerned that they're not going to be able to pay it. But in terms of this article saying that Alaskan Air has been down all of June, so perhaps it is a buy now. I'm not excited yet. I guess I would put it that way. If this price were to fall, let's see what options we might have. Let's see what May was, because May was doomsday for most of the stock market. Really hard to see there, but purple line is your 50-day, orange line is your 200-day. Back in the crash of May, we were in at minus 53. That was a high of about 66. So you are definitely down. I would still feel better if I got this one under 50, to be honest with you. And I don't think that's going to happen the more I stare at this. The RSI at 28 is one of the lowest levels it's had in some time. So you may not see under 50 for Alaska, but if I was playing this stock, which I am not, that would be the price that I would look for. All right, so I'll come back and do some more of these in a second, but I did see a few of the questions finally came in. Thanks, guys, for putting those in the chat. Let's take a look at what we got. Jordan missed the context before this, but would love to get into the airlines, slowly trickling into Love. Nice. Let's take a look at Love, because I'm sure the stories are similar. And if I remember correctly, in just years of reading about a ton of stocks, Love has historically had one of the best balance sheets in the airline industry. Let me pull them up here. Here's your year-to-date. Looks dead on Alaska Air. You're at 51, very similar to February's price. Let's see how their balance sheet looks. So they're at $12.79 billion in debt. However, $14 billion in cash puts them in an excellent position to negotiate that dip. Not to mention we're watching interest rates literally fall today prior to the start of this video. And even in the last 12 months, which we know has been a tough time, you had $7 billion in debt, $7 billion in revenue. So I would definitely say they're in a slightly better position just looking at that. From a historical standpoint, we should be able to get this one in the neighborhood of, let's just call it 12 or 13 on the forward PE. We should be able to find that type of level. So what are the analysts thinking? Can we get to that point to say that we got historically a good deal? Current year of 2021, we know that EPS, it's going to be tough for every airline. So let's just look ahead to next year, 2022. Projection right now is 3, and 319 or 5184 divided by 319 is a little bit higher. That's about a 16, 17, call it, on the forward PE. I would say that with Love, though, because they've done so well in the past, if you wanted to go ahead and tack on a hold for 2-3+ years, you would probably get that money back. You see that this year they're going to hit $15 billion. Next year, $21 billion, which is plus 37%. Again, it's a bounce back opportunity. But if you're looking for an airline stock, this could be a good one. And I say that with some confidence because of the fact that they have performed very well over the long stretch. Can we get a 5-year? So obviously COVID, right? Here's 2016. You've hit 50s, 60s, a little up and down heading into COVID at 54. So if I was Jordan, and he's probably doing the right thing, averaging in, trickling in, this is another one that I would say don't feel bad about waiting for under 50 to average down on that price. I don't know if you'll see it. Take a look at the chart. See if we got a shot at under 50 based on some of the momentum. Oh, I wish that would just line up the right way every time. Here we go. So you're down in 200-day land. Peak was 63, definitely overpriced there. And your RSI at 26. Try to scroll. I don't have an easy way to scroll down and show you that. But the RSI is 26. There we go. There's your RSI at 26. That is definitely the lowest we've seen in the past 1 year. March, peak Corona, you were RSI of 16 into the low 20s. So I don't know. The interesting thing, I think about looking at Alaskan Air and then looking at Love, which if I closed my eyes, I would pick Love only because I know their track record from a balance sheet perspective. I still think that there's room to go down. What I feel like when I look at those charts, to be honest with you, I feel like there was a huge run-up where people got excited, maybe about TSA numbers, stuff like that, and it really pushed airlines. But if we take a step back and we look at the analysis, I think that they still have another year to go to really be producing substantial revenue and perhaps more importantly, substantial profits. I'm guessing that this company historically has had a dividend. I don't know that for sure. I'm not sure if I can find that out in Yahoo about historical dividends. Let me just take a look. Yeah, they don't really have one. But anyway, let's just assume they do. I think that information is in Seeking Alpha. I'll try to look it up while we're talking. Put it on the screen so you guys can see. Dividends. Love does not currently pay a dividend. We know that. Let's go 3 years. And July 19th, July of 2019, October of 2019. So yeah, 18 cents. On today's price, I don't know what that percentage is. I can't, I'm not capable of doing that one off the top of my head. But you can look forward likely to dividends perhaps as early as 2022. I would imagine certainly by 2023, when the airline stock world gets more competitive, Love will be interested in adding to their dividend. All right, DH, is SOFI overvalued? I've spent some time on SOFI stock because it's a product that I've used, and it's I like it. I like their interface. I don't really have a lot of money in there. I've used their personal loan program. You might have seen my review that I've done for that. But I'll show you what I've seen with it that has kept me from buying in, even though from a sticker price standpoint, it is very inexpensive in the sense that, let's see where we're at today. Banks are still getting hammered. This stock has very little history to it because it's I don't know, I think it was a SPAC. Fix this stupid screen again. All right, that's a good view of SOFI. This is 1 year. They're saying that one came out in January. I don't know how true that is. Oh, but you know what? Since it's a SPAC, the SPAC might have been live, but maybe did not become SOFI until recently. Unfortunately, I can't recall that. On the statistics side, not the best balance sheet going right now. So they're running negatives, right? Profit margin, minus 39%, operating margin, minus 55%, $500,000 in revenue, which isn't a ton of money. And then we get down here, cash of 875, we'll call it, million. Debt of $5 billion. I'm not sure if this debt, though, is actually long-term debt or if it's a loan servicing debt. It's really hard to tell from just this screen. So I guess for me, the big thing that comes into play with SOFI is you certainly don't have any profitability on the table anytime soon. Maybe you get lucky. The high estimate is 2 cents next year, but you're probably looking at 2023. This is why you're buying it, which is the revenue. So if trailing 12 months revenue was 500 some odd million, this year they're expected to get to close to 1 billion, and next year 1.5 billion. So that's positive. Let's see what kind of, they don't have price to sales in here. I'm gonna flip over to Seeking Alpha and see how those projections stand up. There's one thing I like about Seeking Alpha that I recently did. I used them yesterday on my video. Now they don't have earnings estimates. There's just not a lot of data in here. Let's try tip ranks. For this, we like to see what are, in more detail, what are the analysts thinking about SOFI. We've got a moderate buy with only one of the best performing analysts who have come in recently. They have a price of 30 10 days ago. 75% upside. So this particular person, Sean Horgan, is bullish. Let's get out of the top analysts and throw everybody in the mix. Didn't change anything. So I would say, if anything else on SOFI right now, mystery. Now, do you buy SOFI at $17 and you say, probably over 3 years they are going to hold, and you're not worried about it because eventually it turns profitable? That's certainly a game you can play, and probably that is the more reasonable play. If you buy it for 17 today with the expectation that by the end of the year it's going to be a $30 stock, I would argue that the odds are not in your favor unless, because we have the new X factor now, right? Unless you get into meme stock territory. I'm not sure how much SoFi qualifies for that label. It's hard to tell where those stocks come from. But SoFi long term, there's worse bets in the world at $17. But I think you're in that 3 to 5 year range to really walk out and say, from a fundamental point of view, this stock will double, right? If I was going to say the fundamentals for SoFi, in order for those to reach a point that the stock price would double, I would say you're probably 3 years away. That's my 2 cents anyhow. Sumitra, sorry if I said it wrong. Any insight on Rocket? Nothing really. I still hold it, still like it. It's going to end up being, in some ways, like SoFi that we just talked about, with the exception that Rocket is a profitable company. They had a $4 EPS last fiscal year. This year, the analysts are coming in much lower at $2. Talked about this before, but I'll give you I'll show you why Rocket just cannot get itself out of the mud. And maybe with interest rates going down, let's peek at our interest rates today. And they're bouncing back up a little bit from when we started, 1.132, but not much. Here's what the problem is with Rocket, and I've explained this a couple times on the channel. So again, 15 analysts, you got pretty good coverage on this one. Last year, refinance boom, they made $4 a share. They issued a special dividend. This year, that EPS drops in half. Next year, from a projection standpoint, that EPS drops even further. So everyone on the analyst front, and you see this, negative revenue growth and negative revenue growth for 2022, it's just a real bad look for stocks when earnings and revenue are projected to go down. Now our EPS trend, which is how things have been going from an estimate 90 days ago, that's even down, 249 to 211. Next year, $1.79 to $1.59. That's where the problem is. I don't mind right now with Rocket. I'm looking at it for a longer term, and it looks like it's going to take a longer term. So similar to SoFi, I personally would not buy Rocket with the anticipation that it is going to plus 50 to 100% in the next 12 months. The only way they beat those expectations, in my opinion, is if they find a way to get off of the refinance IV drip that they're on, and they penetrate new housing market. Because I think new mortgages for new purchases is their biggest expansion opportunity. They've talked about it in their investor calls before. They are working on it. They have some things in place to get there, but they're not there yet. And if they make huge strides in that realm, let's just say over the next 12 months, those EPS projections are going to change if they execute. There's also auto loans with them. I don't think that that's really reached any sort of momentum at all. They have the technology in place, but getting integrated into dealerships and whatnot, still some work to do. So that's what's going on with Rocket. DH, man, I lost all of this year's gains the last 3 days. It's as if the market's manipulated all the popular growth picks. Yeah, so growth stocks are getting crushed. Some more than others. It's... For me, there's a little bit of the FANG recovery that I've been talking about for so long that, I'm sort of glad to see it. Amazon, for example, was really just on a flat line, and that's finally starting to pick up a little bit. Let's see where they're at today. Yeah, even more today. So obviously, if you've been following the channel for a long time, I was pushing Amazon pretty hard at 3,000, 3,100. It's finally starting to catch up to its fundamentals, which is good news, but I feel you, DH, and the struggle that you've had, we'll have to see where things fall with the growth names. And it's always the tough side of it all is, so Amazon versus, let's say, Enphase. So I sold out of Enphase. I get a lot of flack because Enphase is now whatever it is, 190, and everyone's like, haha. Amazon versus Enphase right now. Love both companies. When I bought Amazon, I felt it was undervalued from the fundamentals and the projections going forward. And when I sold Enphase at 160 and took a loss, it was because we were seeing some of that growth meltdown. And my thought was, I don't think Enphase has the fundamentals to support its current stock price. I certainly don't think it does right now. I will likely get back into it, but we're having a switch, and I don't know if it's a value switch or if it's a fundamental switch. But if your stock lacks the fundamentals to support the price, you're always kind of playing with fire, right? Because you're playing the game that more people keep pumping money into it, and that there's always going to be another sucker to sell to. That's kind of the game with growth stocks. It's a tough game for sure. It wasn't tough last year because everything was going up, but historically, it's a tough game. All right. Screw College, what are your thoughts on NewEgg stock? It went up 15 billion in market cap. Let me take a look. Is this oh, look, it's on trending tickers. I didn't have to go I assume this is it. Stupid screen. Well, just trust me. It's on trending tickers. Now it's 86% today. That's crazy. I didn't even know a lot about it. Let's see what they're saying. NewEgg. All right, so if you're not familiar, NewEgg is basically an e-commerce website, formerly known almost specifically for computer and electronics, and they have since branched out quite a bit. This run here, though, is spectacular, and I'm not really sure why. It looks like we don't have any metrics yet, since it's a new stock. Balance sheet looks okay. Last year they did about $2 billion. And let's see our full screen. Yeah, there's really no rationale here. I would say that if you're getting in this one, you're getting in to ride a momentum train, and we're seeing it right there. You've got an 88 on the RSI. You had 70s back in February with nowhere near the same level of price action. It did go up in February from 4 to 7-ish, 17. Anyhow, I cannot see anything in historical metrics that constitutes the jump to $50. It must be a growth stock pump of some kind. I'll take a look at tip ranks and see if they have any NEGG, see if any analysts have any projections. Not even on there. So yeah, I would say risky at best. No one's even covering the stock in Wall Street, not even the worst people. So if you're in and you found that one, that looks like it's meme stock territory. And so I always congratulate people who hit those before they get in. I just don't see how much farther it can go. But hey, GameStop's still trading where it is. So if you've got the stomach for it, by all means. Let's go to Revite. I'm going to try to say your name the right way. Revikrin, something like that. You're asking about BEKE Holdings. Let me just read what this is first. Online and offline platform for housing transactions in China. I don't know about this one. Obviously, Chinese stocks have been in the news lately. I do not invest in standalone Chinese stocks, as I've said many times. It looks like you're off your peak. High was 75. This is definitely one. Now, you got some good analyst coverage, surprisingly. You've got EPS going the right direction, essentially doubling up from 50 cents to $1, and then add in $1.36 next year. So those are strong numbers. And you've got plus 20% on the revenue growth. I would say there's worse things out there. This PE, if you hit $1 this year, your PE is about 39, right? Then it drops a little bit. So there could be something to it. I just don't know enough about it. I'll tell you what, I think the biggest blind spot for me with Chinese stocks, and this is a very, very good example on KE Holdings, is I know United States consumers, right? I can do a lot of investigation on United States consumers when it comes to things like Zillow. I don't think they're apples to apples, but it's a comparison. I would have to be able to read Chinese social media. I want to see like the customers are excited about these things. I want to see that new users are in and all that. And I just can't with a stock like KE Holdings because I don't have the skills to do that. I cannot go through Chinese social media and translate and all those things. And with that blind spot, I'm not interested in investing in a stock like this. But kudos to you if you can, because undoubtedly there's a way to find more information to make sure that it's legit. Let's see. Frank Underwood, can you please check out ARRY? Array Technologies. I've looked at this before, but I don't remember in what context. Let's see what they are all about. Scrolling down to the little solar tracking systems. Okay, so this, I did look at this when I was digging around on Enphase. So these folks make some sort of tool that you can use to basically optimize solar fields, right? Tells you where the sun is coming, how much brightness, or whatever the metrics are that they use. It is also shown up on some undervalued lists that I follow. Here in January, you were at 51. Ironically, after Biden was elected, when a lot of solar stocks went up, you've had a pretty significant drop, down to $16. Negative EPS that could potentially turn positive this year. This must be non-GAAP numbers in this one, but they're still showing a little bit of weakness, a little ups and downs. You have double-digit growth, which is solid. Maybe they hit $1 billion this year, add another 20-some% next year. It's a tough one. It's a tough one for me to say. I'll show you what the tip ranks guys say. Moderate buy. Most recent is last month, and that was a sell at 15. Prior to that time, and I think the last month coincides pretty well with what's going on right here, May 12th. Tough one. I don't see a ton of momentum in it. I would personally want to dig in and try to calculate what is the value of the solar tracking technology. Perhaps more importantly, what is the potential moat? Is there something that theirs does that nobody else can do? And then maybe you're hoping for a buyout here. So I'll use Enphase as an example, Solar Edge, any of those companies. If this tracking device or tool works so well, maybe Enphase buys the company. I'm not sure if that's realistic or not, but you're definitely going to need some sales momentum for this one to get back on track. And by sales momentum, I mean maybe there's a press release that comes out that says, you know, the National Solar Association endorses this product, and we see pallets of these units going out. That can turn around its current trajectory, but from what I can see on analyst projections right now, they're looking at potentially a flat 12 months, flat 8 to 12 months, not where you want to be unless you can hold long. So that's my 2 cents. All right, thoughts on Opendoor? Not a fan. Let's look at it though. I have been waiting. I should have bought Zillow under $100, but I didn't. Maybe I'll get another shot. I just love it. I love the service. I have kind of fiddled with their alternative offerings. And Opendoor, quite honestly, is no Zillow. And I don't think that they're necessarily competing against each other, but I would rather have the broader service base. Here you see we've got about a $12, is that 1 year? Somewhere in July, the first opportunity to buy this, maybe it was a SPAC, came in at 11 bucks, jumped to 28. And now you're down to 16. Let's take a look at the stats. Not a ton of stats here. Almost 5x on price to sales, which is a little high, but it is technology. Let's take a look at the balance sheet. Looks okay, if not solid. They've got $2 billion, which is more than enough to cover this debt. Last year's revenue was $2 billion. Any coverage here? Now you got 5. It's more than some of these small stocks get. So earnings, making their way towards profitability. So that's this is exactly what you want to see for an unprofitable new company. You know, your loss of 262 essentially gets cut in half. Then you make more progress in 2022. Unbelievable projection on the sales growth, 100% and 83% in 2022. So that is very strong. EPS, though, profitability trend is going slightly the wrong way by a couple nickels and dimes. Let's see what TipRank says. Got a moderate buy. Last update was 30 days ago. And that was a buy at 25. So that's fairly positive. Again, if I got into real estate technology, I'm Zillow all the way. And I've looked at Redfin, and I think that they've all got a shot. I mean, hell, we were talking about Rocket Mortgage. They made their own little Zillow. We'll see what the adoption rate goes on there. But you definitely need to get a community of users together. I think if I was going to buy Opendoor at this price, I'm going to go to that qualitative data point again, right? I'm going to go, if it's an app or if it's a service, I'm going to read every review that's out there, see how people liked it, did it work, were there snafus? Obviously, they can improve their service over time, but we need to see a substantial adoption rate. They have huge revenue projections, plus, almost triple digits a year. And that's great to write that down as a projection, but where's that adoption rate coming from? Is it rooted in the success that they've already had, or is it because they're launching new features and stuff? At $16, if you believe it, maybe you buy 100 shares and you do a SOFI, right? You just wait for 3 to 5 years. But there's a chance that Opendoor, SOFI, we looked at another one that's escaping me, Beak, or maybe it was Array. There's a chance those companies don't exist in 5 years, which I know you guys won't probably believe me on that, but it's very true that those companies could either be bought out or they could go bankrupt trying. And I'm not saying it's going to happen, but there is some risk associated with it. So just keep that in mind. I would go for your qualitative data and comb social media and message boards, and not for people like me giving their opinion on the stock. Look at what the customers are saying, right? That's how I came to my resolution on Wish. I went and looked through what the customers were saying, and it's not pretty out there for Wish, I'll tell you that, from real customers. Now forget the user, the stock people like myself who think, fundamentals and this is where it's going. Look at the consumers, and the consumers in America are struggling with Wish. All right, JDC, I already know this one, but I can't think of it. CELH, Celsius Holdings. Up quite a bit. This isn't year to date. All right, year to date, still up pretty good. They do functional calorie burning fitness beverages. We covered this one before on a live stream. It's definitely overvalued at its current price. I think on a previous live stream, we came to the conclusion that Celsius was getting good customer reviews, and it looked like it has some promise in the long term. Certainly a good growth rate, though keep in mind that you are potentially this year at 225 million, which is the equivalent of like a Coca-Cola semi-truck probably. So it is small, but if you like the product and you believe in the product, it might be worth it. I would definitely argue that you should be looking for something like this. The May dip in the 40s, March dip in the 40s. I just don't know how long it can support this price when you're only doing $250 million in revenue and your EPS is 10 cents. So that, that's a topic for another time. But price to sales at 36x. So if you believe it, go for it. There's nothing on this screen that suggests that it's a good deal when it comes to results versus price. Jordan, how did you learn to pick stocks, and how do you read and analyze business fundamentals? So for starters, I don't have a specific valuation method, but you guys, I do the same thing I do on here is when you guys throw this stock picks out, and I kind of just breeze through, like, what's the growth, how's the debt, which way is this company going. Like, I start everything that way, and then before I buy, I'm usually in the investor reports, right? Not necessarily, I know people get into the contextual ones, the SEC filings and whatnot. I like the PowerPoint, quicker reads, the investor presentation documents, because usually what you get highlighted in there is where the next big opportunities are for a company. And I'm thinking to myself about DraftKings, for example, when I was reading theirs last year, and I was already a fan of DraftKings. That stock, that stock could go down just as easily as it could go up, frankly, from fundamentals perspective. But in their investor presentation, when they first came out, they did the journey of profitable markets, and they showed the progress in New Jersey. They did some overseas comparisons, then they dotted on the map where these next markets are going. And the long term, to me, looked promising, and I was already familiar with the product. Fundamental-wise, there's not a lot there on DraftKings to support the fundamentals, to be honest with you. Now, if I was looking at something like, which one did we just do? Celsius. Celsius is probably not going to be a stock that I personally would buy because the valuation is so high. But I would again be in, let me try to show you. Let's try to find their world here. Investor relations. Okay. I've never been to this site. Oh, good. They got a noisy video. Download investor. This is weird. Financial information. Here we go. Reports. Annual reports are often good. This one has a good date, March of 2021. Holy snafu. I don't want that. I want... See, this is the one I don't like to read. This is the big SEC filing. So, unfortunately, not a good example. Let me try quarterly report. I don't think our friends here are going to give me what I'm looking for. No. Anyhow, so not to disregard these reports that are the SEC filings, the 10Q and whatnot. There's usually, here's a presentation. There's usually something like this in every company that you should go look at their last one before you buy. So some knucklehead sits up at the top of the stage and goes through the, the why and all this stuff. But if you dig through here, I don't really care about mission. I'm going to try to adjust this for you guys real quick so that you can see it better. Because I already see some stuff that I like here. All right, so they go through the trends. So this is like the TAM, right? Which, whatever. TAM is weird. I would say TAM can be argued at a lot of levels, but, obviously they're calling out energy drink market, it's going to grow forever, blah, blah, blah. And then they have their comparison across the different categories. So this is a good, set up the market, got it, what's the thing? Evolution of energy drinks. Energy drink sales will grow 85% between 16, blah, blah, blah. Let's hear about these guys. Proven functional energy. And a lot of words I don't know. Thermogenic, for example. Brand adding category value, attracting health-conscious consumers. Okay, I sort of get it. How does it work? Proprietary formula. Okay, so that's a start. Green tea with a bunch of other stuff. Boost metabolic rate. Okay. Investment considerations. Disruptive beverage. Capitalize on health and wellness. Strong momentum. And you get into the momentum, so I can see that. Expanding the channels of trade. So this is sort of what we're looking for here. Expanded offerings, strong sell-throughs, best retailers, blah, blah, blah. Expanding top-tier distribution, including Anheuser-Busch. I would need to know more right here. I would need to get into this number 4 a lot more. Like, you sold X this year, right? So expanding the channels of trade, I want to know a lot more about that. Acquisition of fuel global growth, I definitely want to know a lot more about that. So those are some things that I'd be looking into. Financial positioning, performance versus category, could be some stuff in there. Here's strong consumer base. So here's where they sell. I think the key here for me when I look at this stuff is, okay, you've already got Target, Walmart, Speedway, in addition to Kroger's, Myers, whatever. Where else are we going to go, right? Besides growing the brand. Where else are we going to go? Fresh Market, CVS. So that's a little scary, just clicking through this for the first time. Placement. So that's their grocery store display. Distribution, blah, blah, blah. And this is nothing for me because I already know where it's being sold. Where's international here? And this is important too. Innovation portfolio. What are we doing? So it looks like they have some different flavors coming out, which is great. I still think the brand growth is going to be more important in my opinion. Celsius on the go, powder stick, grab and go option. That could be something. Okay, we've got a new product line, some sort of, this is good right here. I don't know how these sell, but this is good because you're not banking entirely on the drink by itself to grow. So maybe these take off, I have no idea. Growing global expansion, this is great. So European distribution, I'm not going to bore you guys, but we have some opportunities. It looks like Asia, but Asia was launched in 17. 2024. China agreement creates risk. I don't know. Didn't see a ton in there. So to get back to Jordan's question, when you think you found the fundamentals that you like, then those investor relation presentations are really good because there's somebody sitting up on a stage somewhere and you weren't invited and neither was I, that they're going through this whole thing and talking about how are we going to grow. And for me anyways, the biggest thing is knowing that you still have growth levers to pull. I don't necessarily need 100% growth, right? Because that usually comes at a price premium. But I want to see, almost on all my stocks, I want to see double-digit growth projections, probably over like a 5-year period, but I certainly want to see it almost written down from an analyst perspective for the current year and next year. We've got to have double digits, period. And then on the revenue side, ideally getting close to 20% for the next couple years. So those are like, that company intrigues me, right, when I can see that. And then going back to fundamentals, looking like we've all done here today, what is today's price mean? Just because it was $40 yesterday and it's $50 today or vice versa, What does it mean from a valuation standpoint? Is the current price to sales, P ratio, PEG ratio, whatever metrics you follow, how does today's price compare to yesterday's offering? Because we know that in the stock market, if you wait around long enough, there's going to be a bad day. And maybe that's when you pick it up. And last year was a horrible example because there was a really bad week in March and things just went up from there. But I think we're starting to see a return to normalcy when every couple months or so we're going to have buying opportunities. And so that's how I look at stocks. I want to see some documentation that you are going to grow. How are you going to grow? What does growing mean? What are the percentage points of growth that you're talking about? What is the growth in profitability? It's okay if you're not profitable, but you should be chopping off lumps of negative revenue, and you should be at least working towards zero at the bare minimum. So I don't know, Jordan, if that helps, but that's kind of how I look at it. I also try my hardest to keep within stuff I understand and I can read about. So not a beverage guru. I've never had Celsius. I'm not even in the market for Celsius, just to be honest. So that one doesn't resonate as much with me. But DraftKings, for example, was one that I do a lot of during the football season. So it was easy for me to figure out. Hopefully that helps. Kevin Hawthorne, how you doing? DH is asking about cop art. And I'll take a look at that. Soud comes in with financial sector, and I was thinking about doing that video tomorrow, but I'm with you, Soud. Hopefully I'm saying your name right. Banks are getting crushed because interest rates are getting crushed. And even though they've all run up since whatever, November or October, whatever, if you were ever going to add a bank to your portfolio, whichever one you like the best, don't pick Wells Fargo. Now's the time to start looking. Okay, so if you like JP Morgan Chase, if, for example, I have money and stocks in Ally Bank, they also do lending, so that could be an opportunity for me because I'm familiar with the brand. Whatever your banking alliance stands with, if you're thinking about buying those stocks for the future, you're starting to get to that point where they're a good deal. All right, cop art. I'm all screwed up now that I went on this Celsius page to get back to the huge. This one rings a bell. Setting up the screen for you guys. Hold on. All right. And I'm just going to remind myself, online auctions and vehicle remarketing services. All right, so we're talking about car auctions. And there's some good stuff here right on the first part of the screen. We've got positive EPS, positive P ratio, so we know that we're dealing at least with a profitable company. Last year at this time, the stock was 83. March took a dip down to 100. Now you're at 138. Obviously, used cars in America are absolutely on fire right now. 360 EPS jumping to 394. You definitely have double-digit revenue growth for the next 2 years. Now, as I just went through my soliloquy, how does today's price look compared to what you could potentially have bought cop art for in the past? We'll be doing an annual view. Forward PE, that seems about right. I was 30 or 35. In 2019, you could have got it for 30. In 18, I imagine the used car landscape was a lot different, and it was in the 20s. I will say, without doing any more research, I'll say, it does look like it's probably fairly valued in a low interest rate environment when you have the demand for cars so high right now. I wouldn't say it's on sale. And on a quick analysis, 30 days ago on June 10th, you could have got it for 122. You probably need to get back to that point if you want to make sure that you're going to make something out of this stock. If you want to guarantee a profitable trade on this stock over 12 to 24 months, you're probably going to need to get in at 120 or under. I don't know how long 140 to 145 is going to last, just to be honest with you. But it looks like a solid company. I didn't look at their debt. I should have done that. They're fine. 500 million debt, 900 million cash, running 2.5 billion a year. They're fine. Unless there's some just goofy thing I can't see. NEO stock. Don't buy Chinese stocks. NEO under 50, though, is probably where you want to go. Screw College. Palantir is getting hit today. I think that with Palantir, and I'm a fan, and this is a long-termer for me, I don't mind when it goes down 7%, because for me, I've accepted that this is it's either going to work in 3 to 5 years or it's not. And I've accepted that spot for myself. I would target as close as you can get to 20 or potentially even under 20, knowing that it is a volatile stock, and a market correction gets you very close to $20. I'm trying to build up my Palantir at 20 or very slightly under for the long haul. And that's because there's another investor report I read. If you look at the things that they're in and how their contracts are growing, it's very impressive, is how I would leave it. And I would say it's a fairly low-risk stock at $20. I'll say that. Not necessarily going to dump into zero land. I don't know how high it's going to go, but I have no qualms buying Palantir around $20. All right, I am going to hit the Vortex, who's got 2, and then I got to run. Guys, it's almost lunchtime here in Cincinnati. I've got a couple errands to do. Task Us Incorporated. This looks like it went live on June 7th, so probably not a lot of data in here. It hit 35. It's unusual. Now let's see what this says. Now, I was trying to get a feel for what the hell they do, to be honest with you. TaskUs provides outsourcing services to internet companies, digital customer experience, omni-channel customer care, content security. Okay, so it's a service platform of some kind for internet companies. No coverage right now. Balance sheet, 250 million in debt, 135 in cash. They made 528 last year. It doesn't look like there's a huge risk in that world. I'd have to read about it. $528 million. So price to sales of 6. What I would have to do to really give you a read on this, to be honest with you, is find their closest competitor that's been in the game for a while and try to correlate a 6 on price to sales with that competitor. And that would take too long for this. But there might be something here. I would read a lot more about it before I could tell you for sure. Sorry. Apps I know, which is Digital Turbine, yes. They've gotten hit pretty hard here lately. This was a stock way back in the day. Yeah, it was under 20. I covered this stock under 20 100 years ago. And I like their offering. And there's not like, it's not horrible, some of the stuff that has come through. So you see their earnings. They've always beat earnings. They're positive. Provides mobile communication products and solutions for mobile operators. Monetization, blah, 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 blah. Something bad happened to this. Let's see. Yeah, that's not going to tell us. Let's see what analysts are saying. I'm going to skip. There's a reason that this is tanked, and I don't know it off the top of my head. But EPS-wise, doubling up here, getting a little bit better next year. Huge growth projected for the current fiscal year, 200+%. Then you're going back down to normal, so to speak, at 30%. I like it on paper. I wish I could find out if there was a glaring hole in it. There obviously is. All right, now you got buys into the triple digits on tip ranks. So you might have something here with apps, APPS. Here's our stock price. See what happened here at the bottom. I don't know. I need to find out why it dropped. But there's no bearish articles. Anyway, you might have something there. You might very well have something in the short term there, Vortex. I liked what I saw. Need to get to the bottom of that drop from May. And not only in May, but you had a subsequent drop around July 2nd. So we need to get into that a little bit more before we can feel good about the rebound. But good call out on apps. Might have to cover that one in more detail. All right, guys, I got a roll. I do see my friend Chestad. He's asking about FANG better with NVIDIA. I know. I've gotten a lot. So I like Netflix. Okay. I think it's a fundamental good stock. And I think that it's not going to go up 100%, but I think people are underestimating Netflix. There is, however, a ton of people suggesting NVIDIA instead of Netflix in sort of the FANG M algorithm. You know, I can see it. How could you argue it, quite honestly? Now, look at NVIDIA's price. I don't know how you get excited about buying it at this price. Certainly, if you had it already, you would probably hold. If you're new to stocks within the past, like let's just say 16 months, there's a time that's going to come that's going to floor you, and it's going to be the semiconductor drop. And I don't project that that will happen because of demand outstripping supply. It could be 2023, who knows? But eventually chips get hammered on margins when the market gets flooded with them and buyers have different options. That'll happen to NVIDIA again. It happens to everybody in the chip sector, AMD, Intel. It always happens every few years. So if I am in NVIDIA or I want to get in NVIDIA, I'm doing my very best to get it as low as possible, because one day, 3+ years from now, you're going to wake up and there's going to be a chip bloat where there's way more than they need in the consumer cycle. And then from there, it'll go back up. But if you do see that bloat, buy as much as you can at that time, because they always go back up. Chips are always going to be needed. But it's just a cyclical thing. It just happens. So, all right, guys, appreciate it. And hope everybody's doing well. Thanks for coming out today, and we'll see you on the next one. Take it easy.